So the numbers are out for the month of August, and obviously what we are seeing is basically a snapshot of what you have right in front of you in your screen. We did see continued reduction in the demand. Buyers are obviously more cautious. Inventory continues to climb. Sellers somehow have pulled off, obviously because of the softer demand in the market than what the sellers would like to see. So overall, it's been a very chaotic month of August. We have seen lots of ups and downs. And of course, we had the recent job numbers that just came out. And let me tell you this, they're not looking good at all for the economy. But it's going to be very interesting. We're going to dive into all the numbers that just came out, as well as I'll tell you my insight and my 2 cents about what you can expect moving into basically the remainder of this year, the remaining 4 months we have left for the rest of 2025 for the Waterloo region housing market. So stay tuned and let's dive straight into it. So this is the slide deck that I put together for us. And this is what I'm going to continue doing to present this market reports moving forward, because I do feel like they're data driven. And of course, they keep things to the point for everyone. So let's move on to the next slide. And this is the slide we looked at earlier. So what we saw in August, average price, just over 700K for all property types combined. If you look at year over year, well over 5% decrease. But if you look at month over month, fairly stable. Well, homes sold, we saw 536 homes that basically exchanged hands during the month of August. If you look at the year over year average, again, you can see there is a fairly flat line, like 1.3% decline is not that material to define downturn or any other direction. But if you were to compare the 10 years average, this is where I'm seeing a material decrease. And, it continues to be that way over the past few months. And that 23% decrease is significant. The reason I do look at the 10-year average versus a 5-year average, if you may ask, is primarily because, the 5-year average, you can argue almost 2 to 3 out of those 5 years were, crazy years that we saw in the market. 2021, 2022, part of 23, you could say. So, that won't reflect truly what could be an average. But if you look at the 10-year average, you could argue that before COVID, from 2016, 2017, market was overall fairly stable. And that's when you compare that 10-year average, there is a significant decrease, compared to the number of homes that are supposed to be sold for the month of August. 1,028 new listings. Of course, again, I'm not going to look at much closely for a year over year, but if you look at the 10-year average, there's a 11% increase when you compare to that 10-year average for the new listings to come out. So clearly, we have more inventory in the market, which in turn means many more options for the buyers and not so great news for the sellers, if you may ask. Average days on market stays fairly stable month over month. We had 32 days in July. That's what it took on an average. Same in August. So it has not gone up or down. But if you compare it to August of last year, it used to take about 25 days on an average. So, you can clearly see with more options for the buyers and not that many buyers in the market, it's obviously is taking for the homes to get off the shelf a little bit longer than it would last year this time. So, and again, if you were to compare the previous 5 or 10-year average, I can tell you this number would be well under 20 days. Somewhere around 18 to 20 days is what was that 10-year average. So we are clearly way over that, what's considered the normal balanced market condition. What's actually selling and what are the homes selling for? So obviously this is the average prices. Keep that in mind. We will still look at the HPI, the home price index numbers, which is in my opinion, it's a more accurate reflection, especially in the shorter run. But I'm not going to pay too much attention to the month over month change. But if you were to look at the year over year, you can see the detached year over year 4.6 average price drop, semis 5.5, 3.2 for townhomes. And again, this is where I say average prices are not a good reflection, because if you look at the HPI numbers, townhomes have lost quite a bit of value, more than 3.2 that they are showing here. And for the condominium, 6%. Again, condos have gone down much more than 6% if you look at the year-over-year numbers for the home price index. And as I keep talking about it, these are the benchmark prices from the home price index tool, which in my opinion is a more accurate reflection. And this is where I meant townhomes down by 8.5% year over year, and apartment condominiums 7.1% drop year over year. You can see the HPI tool, like basically the index price for a detached was $795. For a townhome was well under 600,000, which is, I feel like it's a massive decline. And for condominiums, just over 400,000. So townhomes and condominiums are the ones that have, gone through a major, shift in the price and the demand. And, as I had mentioned earlier, part of that reason could be now that, many buyers falling into that, first time home buyer price range of say somewhere between 6 to 750, 800,000, they do have, options in the semi and the detached space. So the demand for townhome overall would have gone down. And that's basically, at least from what I see, one of the reasons could be why we are seeing a shift, a major decline in the townhome prices. It's purely because of the lower demand compared to that of the detached. What is driving these numbers, right? What's driving the condition? Of course, it stays the same. The story stays the same. Inventory growth, we see continued inventory increase when you look at those 10-year and the yearly averages. Balance condition, market obviously has shifted from seller's market to a more balanced, but I would still like to argue that it's shifting rather closer to that of the, if you were to look at it like it's more in the control of buyers than it would be in the control of sellers. But overall, looking at the fact that August did show some sign of stability, you could say it's kind of a balanced market. And we will still do that sales to new listing ratio when we look at those numbers. So that will actually kind of give us that idea. In fact, we could just pull that up because we did look at that slide. This one. So sales to new listing, if you were to look at it, I have my phone here. And so 536 homes divide by, so we are basically 52%, right, of sales to new listing ratio. And that's basically what I would say anywhere between 40 to 60 is considered the rather balanced market. And that's what we are seeing here. So you will see if that continues. Most likely, market tends to, slow down as we approach the end of the year, but we will closely monitor it. Affordability pressures, of course, buyers are cautious, and at the same time, we all know the reasons by now, like the economic uncertainty, job numbers are not looking good, overall sentiments in the broader economy. If you ask a business owner or a consumer, it's not looking that shiny, right? It's not looking that optimistic, to say the least, right? And that's what obviously is holding a lot of buyers on the fence, and they are not too comfortable pulling the trigger and making big moves and committing to a huge financial responsibility, right? So seller hesitation, that's what we saw in the month of August, especially. And that's why we saw, market balanced a little bit more in kind of, coming to that middle ground, because guess what? Some sellers also kind of pulled off from the market. We saw, quite a bit of cancellation, but at the same time, we did see, we are seeing sellers basically are trying to postpone unless they have to sell and move out, say, out of country, out of province, or relocation due to job or something like that. Most of the sellers are kind of holding off from selling because, let's be honest, it's not fun being out there and putting your house on the market because, clearly you are not in the strongest position that you would want to be as a seller. But are there homes selling? Of course there are. And, I will get into it a little bit later in this video as to what sellers would need to do in this kind of market if they are still planning to sell, right? And there we go. Why affordability is the front and center? Well, we know primarily the inflation numbers, if you look at for the month of July, it's down from 1.7 from the previous number, 1.9. I mean, just keep in mind, these are the core inflation number, but if you look at the food, the shelter, like basically the day-to-day cost, right? It's still very sticky. The only thing that contributed primarily to that inflation number going down that much is the gas prices, and which is a major commodity that plays a big role in this inflation numbers. And that's why we saw. But we go around, I mean, I go for grocery and I'm virtually paying every month. I feel like I'm paying more than I was in the previous month, right? So we are all feeling that pain and the price pressures. And, we know inflation is sticky, and it has not nowhere near under 2%, if you ask me, right? Consumer confidence is improving, but cautiously. And that's going to be the story until we see some stability in the broader economy. I don't think it's going to change. Unemployment numbers are not looking good. I mean, they were terrible. If you look at it, the report just came out yesterday, and we lost about 66,000 jobs. Now, mind you, though, most of them are retail part-time jobs, according to them, that report at least. But we all know just the fact that, new jobs are not available, even in the skilled labor. Forget about the full-time permanent position, but even the temporary retail entry-level positions are few and far apart. And, young Canadians are definitely feeling the pinch of it. And that's, not hiding anymore from the jobs report. So, tech sector showing mixed signals in the KW region. Honestly, it's a lot of my clients and most of my clients are the, IT professionals, and they are not seeing too much optimism in the market these days. So they're basically holding on to where they are. Guess what? There is not a lot of jobs out there in any sector, and tech sector particularly is facing a huge downturn in new hirings. Many companies have in fact frozen the hirings, right? So let's take a look at the interest rates. Bank of Canada pretty much decided to keep it the same. We do have one more announcement next week on Wednesday. We will look at, cover it in our, future report, but most likely they could still stay off the fence and not decide to change the rates. That's what it feels like. But just the fact that this employment data came out, we don't know if they would. But my bet is going to be that they're going to stay where they are and not change the interest rates, because they still want to closely monitor and see if this trend continues. And especially, we just had a news come out from the US that, the study from UBS and I forgot the other publication, but basically they are projecting, Moody's, they're projecting that US economy is pretty much at the brink of recession. So if that happens, guess what? Not just Canada, but pretty much most of the world will feel the pinch of it. So I feel like Bank of Canada is holding on to the gas for that to pan out and see how that pans out. So they have enough gas left in the tank if they need to continue to support the economy during that economic downturn. So that's going to be my take. I don't think they're going to reduce the rates, the policy rate in the next week announcement. But we'll see. What buyers should know? Well, clearly more inventory, you have more options. You can take your time. You have good negotiating power, conditions, and all those things. You don't really have to time the market. But yes, generally speaking, typically we would see, like if I were to look at the September report, I would like to see the sales number go up, because typically July, August is anyways considered a slower time of the year for real estate. Spring is good, but then summer is slow. But come September, many families do kind of bring their focus back. They're back from vacation, kids are back to school, and then they come back into the market, start to, consider those moves, right? So we will see if that results in increase of activity. But overall, that could be a good time. Like I said, overall, if you're financially ready, you are, it's the right decision for you and family. Then, and of course, you have enough savings besides your down payment, and you have a stable job. Then, you could consider making a move in any given market, right? So remaining cautious, obviously, that's what the buyer's sentiment is. And I would be the same. If I'd be a buyer, it wouldn't be any much different, because we don't know if, just the broader economic uncertainty is not driving and sending good signals to any of us, right? So the tip for you though, if you're really out in the market, then, there are some really good deals to have. And you can really get away with some good negotiations. And we have done that in this year, especially with the buyers that I worked with. And that's why I'm saying that. Coming to the seller side of it, yes, I have mentioned again, don't play around with the prices, be very much realistic, take a closer look at your comparables and keep on top of it as the inventory moves in your immediate street or immediate neighborhood, because that will go a long way for you if you need to adjust your prices or your expectation. Prepare to, obviously we saw that average days on market being 32 days. So prepare to be on the market for a little bit longer time, and patience will be the key in this market if you're planning to sell the house. And of course, be ready to accept and work with the conditional offers. I can tell you, I have been able to generate multiple offer situations for my sellers this year. But guess what? Even the multiple offers were conditional offers. So don't expect those firm offers. Yeah, that could happen, but it's very rare and it's one. You know what? Even just considering the fact that there's so much of economic uncertainty in the market, the buyer that I prefer to work with is the buyer that is doing all the due diligence and making sure their financing is done. They're, firm and binding, and they know exactly what they're doing rather than just playing around and putting a firm offer and, something doesn't fall through appraisal or the mortgage and they have to back out. You would not want to deal with that. Conditional offers are rather a much better situation to deal with than a buyer's backing out. So, of course, goes without saying, but now it's more than ever important to keep your house, declutter, staging, professional photography, marketing on point. All those things are going to be the key to get your home off the shelf. So what's coming? I did dive into briefly, and I'll share the reports from this news publications, primarily the RBC Economics as well as the TD Economics. I personally follow RBC Economics very closely. And, what their outlook for the housing, they actually do have a section about the Canadian housing, and you can cover it. You can follow it. Very good informative article. They publish, I think, a few times a month. So it keeps you really, updated on what's really happening, from the numbers standpoint. But overall, they're not too optimistic. You can see, especially for the next year, they are saying, RBC is saying prices could still show modest sign of, decline, where TD is saying, we might see prices go up a little bit. There might be a slight increase in price, but we will see. Just the way market and the, economic conditions have never been so volatile, and it has never been that difficult to predict what we can expect. But with the, with everything that we have seen so far this year, between, say, the month of February to now, anything could happen. Like just the one announcement from the south of the border could, basically change the entire market in either direction. And that's the kind of volatile market we are all in. So that's what it's all about. But yeah, that's what we are looking at. Having said that, this is basically your fall, September market update. Like I said, if you just want to, connect and find out, what it holds for you out of this report and all these numbers, whether you're buying or selling or you're considering to move, or if you're just not sure, I'll be happy to help. And trust me, I won't, I don't pressure or I won't chase you. If you tell me that, now is not the right time for us, because, you can still have a friendly dialogue. I would love to know your perspective and where you're at, and I'll do my best to help you out. Feel free to reach out. All my info is right below in the description. Until next time, I will continue to show you around the town.